So most people ask one question to me when I say that I'm a trader. They ask me a question that then just explain me why do prices keep moving up and down. So it's a very basic economic concept that when there is excess supply in the market, then the prices tend to fall down, and when there is excess demand in the market, the prices tend to shoot up. So it's a very basic economic policy or economic concept that everyone has to know. If you're a commerce student from your high school, then of course you know. So the same way, just consider me as a seller. When I sell my all the holdings, when I'm a big seller and I decide to sell my holdings in large quantities, what happens is I push up supply into the market, because all that I had, I'll give it to the market, and the supply in the market increases because I'm giving something to the market from my side. So what happens is the supply increases and it becomes excess because the demand has not increased, and this results in the fall of prices. And if just consider me a buyer, so what I'll do is when I get a decent price for a unit of stock or the unit of index, what I'll do is if the prices are low, then I'll try to buy more. So what happens is when I buy more, then I'll create excess demand in the market because I need more and more from the market. So I take more and more from the market, and the demand for the units or holdings gets increased. So as a result, what happens is the excess demand forms and the prices tend to shoot up. So this is what happens. This is why the prices keep moving up and down. This is a very basic economic policy, but most people, I don't know what reason, find this difficult, and I'm not blaming them because they might have not learned this in the right way. But yeah, I have tried to explain in the right way. So just consider a plane. So the price is like a plane, and it might always not, in the long run when you see it, it might be like it's an uptrend. But then you have volatility in the price action. The same way how you have volatility and turbulence in the pathway of the flight. In the long run, when you see from a distance, when you see after the price has reached a certain level, when you see after the plane has reached a certain level of height, it seems like the plane has traveled in a single path. But only if you see it up close, then you can understand that the plane is going up, and again it has to settle at a certain limit, and then again it has to shoot up. You cannot just always shoot up and shoot down. You have to fall till a level, or you have to rise till a level, and you have to settle for a certain period of time, and again you have to fall or rise. So this falling and rising of the prices, it is decided by the market forces of supply and demand, the entry and exit, and the the game between the buyers and the sellers. All you have to do to make profits is you have to follow the trends, and yet don't forget, stop taking much emotional decisions. Learn to control your emotions, because the main aim is to take quick and smart decisions. It's not about taking quick decisions. Okay, anyone can take quick decisions, but it has to be the quick and right decision. So hence you have to be smart, and you have to know things. You have to know things in and out. Only then you can take quick decisions, or else you're going to end up taking losses like how I did in the previous time. And I have mentioned my WhatsApp number in this description. So what you guys can do is you can text me anything in the message, and when I see your message, I'll try to reply. No, you just have to mention that you've seen my video, and you just have to say that you're from a part of traffic from YouTube. So what I'll do is I'll provide you with the material for this course, the price action course, free material. I'll provide you with it. Thank you. Have a nice day. Until then, meet you in the next video.